you for joining me. This is Trading with Livevol. My name is Stefen Choy, and this is where I trade my own Reg T account, and I use LVX to trade. So let's jump into it. So we always start with the summary wrap-up. Looks like I'm down a little bit. As you can see here, there's this trade right here. So I want to kind of cover this Apple trade right off the bat. And what I did, and you know, my timing's got to be like the worst ever, but basically I bought these weeklies, 542.5 calls, 20 times for 275 this morning, and I did it because you know, I thought Apple might go to 550 today. Now, I just want to make clear on this trade alone, this trade right here that I did in Apple, doesn't have that much to do with the software. It's something just technically. I was looking at price action on Apple yesterday, and so I've been looking at the price action of Apple for a while now, and yesterday was the first day that it didn't really sell off, right? So I actually thought it might actually have a day where it bounced up, but you know, my timing is horrible because I bought the calls right here and then it went down here, right? So I think at my worst point, I was down like $2,000, and my thinking was I was going to invest like 5,000, and I'll be willing to take a loss of up to 3,000, and I have a chance of making 15,000, right? So that was basically my math behind why I did this trade. So it's still basically it could be anything. It could go up, it could go down. You know, obviously I'm thinking it's going to go up. That's why I put on this trade. But literally, if it went back down, it's not like it has to go up, right? So it's a long shot, but I was willing to risk 3,000 to make 15. You know, so basically, I thought it was worth the shot. The thing I am kind of understanding is my timing on this was horrible. So I could have probably kind of waited until kind of like where it like settled and then put it on. Would have been probably wiser because I could have probably put it on for 210 instead of 275. But another thing is 20. That's a pretty hefty amount, 5,500, and my account is 40,000, right? So I think just mentally, I'm still kind of like at a point where like maybe I'm trading too large for what it is, or you know, I need to get this account up to like 100 grand. So if I bet 5,000, it's not going to be like, you know, a huge thing. So. So just want to let you guys know this part has very little to do with the software, except for the fact that I did check the order flow, and I know you guys saw it yesterday, just to see which way it was leaning. And basically, it's pretty much the same. So like yesterday was slightly higher, 1.9 to 1 on calls to puts and leaning slightly long. But in general, like you know, it's been neutral. Like there's nothing on the order flow that's telling me one way or another. I was just taking a complete shot on the price action. So basically what that means for, I don't know, for maybe the guys who don't trade technically is that I actually thought it was going to go up. So I'm going to take an hourly. So, you know, basically yesterday when it right here, when it ended up here, I thought the next move would be to the 550 range. So I was hoping that's what's going to happen, and I took a shot, and I was willing to risk 3 to maybe make 15 and get that return. So maybe what I should have done is, you know, do less. Like if I only put like a 2 lot, right, instead of 20, I wouldn't have been down $2,000. I would have been probably down like 200, and it wouldn't have been that big of a difference. But in the end, it is what it is. It's part of me more than I guess the software itself. So the trading is trading. A lot of times I made a lot of money and lost a lot of money doing exactly what I'm doing right now. Not so much on the weeklies, but just betting aggressively directionally. I think you guys know that from me trading ZNGA, and you know, I'm still bullish in it, and I'm still having positions that's pretty bullish. So I keep doubling up, but in the end, who knows if it's going to work out? But until I change my mind, I'm just going to stick with it. So let's actually go to stuff that we did. So yesterday, remember like all this Masco calls were trading yesterday right here. The only problem was it was 6,000 contracts, right? All these things trading. We didn't know whether they were opening or closing. We were guessing they were opening just because of this the prior day. So the way I got it was like you go to Masco. Sometimes I go too quickly, but here it goes. There's Masco right here. The strikes are right here. If you the beauty of the software is you click on it and you can actually see the price of the option for the past like 30 days, the volatility of the strike for the past 30 days, and also the open interest and the volume. So you see how the volume yesterday, April 1st, was about 7,000, and the open interest was 62. So there was a chance that they were closing, but when I kind of checked on it in the past, like so I checked this date, and I found out that they were opening. They were also buying on this one, so it didn't seem like that they were closing, right? So I took an educated guess and thought it was opening. The volatility was pretty much at a 50-week low. So it was like, and then I look at the chart. Let me actually go to it. You know, it looked bullish. So the chart looked bullish. The stats told me it was bullish, and you can see today, April 23 calls. They're piling on more on these, right? So they're buying more of these calls for 30 cents. So they're just buying. So I bought 12, pretty much about $500 worth from yesterday's action, and I'm basically piggybacking their trade. So this is like a perfect example of how you can use a software, right? So for idea generation as well as all other stuff. So what happened was, did I come up to trade Masco? No. Did I actually, you know, do some kind of scan to trade Masco? Not really. What I did was I basically had this thing up, right? So this one has all the trades, that 1,000 contracts or more, and I just keep track of it, right? I just look at it as a ticker, and if there's a symbol I like, I just look at it. And then there's this Pro Scanner. And I think I got it from this, was like high call volume, right? So you can see this DFC Global company has like 47,000 call volume. So we'll look at it a little later, but you can see right away, like, hey, it's something worth investigating. That's what happened to Masco, as well as if you look at this one right here, right? You see it coming up here again, right? So there's block trades here, so you would have caught it here, and then you can catch it here again. But that's how I caught this one. It doesn't mean you're going to trade it, right? So what happens is that just alerts you, and you're at the beginning. So that's the first step. That volume printing is the first step you into investigating. So you know Masco, I traded before. They do like housing stuff, right? Like furniture and stuff like that. So I have some experience trading this before. I was looking at the vol. It was at a very, like if you look at it, it's pretty much at a 52-week low vol. Let me actually click on the year so you can actually get the year. This red line right here is the IV30 line. So this is the 30-day rolling implied volatility, and it's a proprietary calculation by our company. So what this is like the VIX for the S&P 500. So each of the stocks that we trade here, you guys can actually get to see the IV30 for that particular issue. So you can see it's at a very low vol. So it's probably the best time to take a shot if you wanted to. So that's why I took it. So I took the shot. I piggybacked this order because order flow, number one, the order flow. Number 2, the volatility being at a 52-week low. And number 3, the technicals look bullish. So those 3, and plus the fact I traded Masco before, and the housing sector, kind of like as the warm weather recovers, might be the first one to kind of where people buy before the recovery is announced, right? So all those factors made me piggyback this trade. Another trade that went up yesterday was silver. So yesterday, some guy, and this is independently, sold these. This is the weekly 19 puts. And then they bought the April 19. So this is the normal expiration 3rd week of April puts. And they did it, but separate trade. But as I looked at it, it was a trade that I liked. So I actually put in the spread where I was selling the April this week, April 4, the one expiring this week, 19 put, and buying the 18.5 put for 1 cent credit. So what happens is if let's say the silver trust expires above 19 and these go out worthless, I basically own these puts for credit, right? So that's kind of like what I'm trying to do anyway. So this was like right up my alley. So it's easy for me to just piggyback that trade, right? So those were what I did yesterday. And then this morning, I was like looking at some trades. So one thing is there's like a lot of other trades I would like to get into, but I can't just because I have no more margin left. So, but this ACI was kind of interesting to me. I know there's some rotation going on, but you see this huge block of trade, 20,000 by 20,000. So if you look at the stats tab, you'll see that basically what they did was buy these calls and sell this put. Sell the 8 calls. So they bought the 6 calls, October 6 calls, and sold the 8 calls. Now you're saying like, hey, it's red, which means it was sold on the bid. Well, if you look at the original print, went up at this time. So like this was actually the original print, 10-cent bid at 45. You see this? This was actually the market when the real print went up, and then they had to cancel it and reprint it. Probably because they missed maybe stock or something like that. But whatever the reason, they had to cancel it and reprint. Maybe because the guy only wanted to do 19,000 instead of 20, right? So you see how like it's not the same volume, but they print it and it says open report in sequence. So basically this was out of order. So this was the original trade. So I'm going to stick with the original trade, which is that this person is long the 6-8 call spread for 35 cents, right? Now Arch Coal I traded for a little bit in the past, but you see how this there's this definite, so it's gotten beaten down for the past 2 years, but if you look at the 1-year chart, there's making like this nice round bottom. The order flow is basically that I just showed you, and the volatility looks like it's pretty low, right? So if I look at it right now, that line that I'm pointing to is below pretty much the whole time it's been trading, except for the past month or so, right? So normally if I like this trade right here, right, I would piggyback it. So I would actually go to this trade and I'll say, hey, I'll do this trade right here. And now you can probably do it for a better price because it's actually less. So let's actually go to a complex. I buy this, sell this. And you see how this is 33 bid. Let's say I actually put a 32 bid. And I'm only going to do one just to kind of give you an example. And then I'm going to send this order. So that's how I would piggyback it. And I just got filled, right? So I'm actually have the same trade on as this guy, but I did it for a better price. It's kind of what you're trying to do. So you're kind of like, hey, look, do I know, am I an expert in coal or Arch Coal Inc. in particular? No. Usually what I do is I do a trade because I kind of initially like it, and I'll go home and do some research, and if I like it more, I'll just do more of that trade. And that's generally what I've been doing, right? So that's Arch Coal. So let me actually go to next one. The other one that showed up is MDR, McDermott International. Basically, let me actually go to fundamental. So they're an engineering, procurement, construction, installation company, designing, executing complex offshore oil and gas projects worldwide. So basically, I guess if BHI or Schlumberger need to build more rigs or something, they might hire these guys, right? So, you know, why did they come up? Because I was looking at the trades, and you see that somebody is buying the April 8 calls for a dime, and then they're buying the August 7 puts for 80 cents. Like, to me, like, there's nothing here really, but the fact that they're paying a dime for these, if you're trading it, maybe you should keep an eye. And then number two, to see if the open interest is going up or down. So you see this open interest is going up. What people could be doing, and a lot of times I did this, was buy this and sell stock. The fact that this person is buying the August 7 puts 2,000 times also is not too bullish for the stock. So you see the stock took a dive the other day, so it's something to keep an eye on, right? The next one is DFC Global. So DFC Global, I think we just saw that in the Pro Scan, and it was number 1, right? So if you look at the stats, basically what they're doing is buying the May calls and selling the July calls, I think. And let me see what they do. They are, oh, okay, so they're the Dollar Financial Corp. Unsecured. Yeah, so they're basically a financial services. They're kind of like a bank, consumer lending, but not a bank officially, right? So what are they doing? I look at it, and it looks like they're doing this spread, right? May 10, July 10, right? So if you look at the stats tab, I go down, July 10s are here, and the May 10s. So like, if you look at it, they're buying the May 10s, I think, and selling the July 10s. Let me actually try to verify. So just so you know, what I did was I clicked on this. It gives me all the trades that happen on this line right here. I can click on it again, and then it'll take me to time and sale. So if it takes me to time and sales, it looks like people are selling the May 10s. You see how they were selling at the beginning? But now it looks like they were buying, and then all these prints, the large prints are buying. And yeah, so maybe it's, it's not as clear cut of just purely selling, but most of the larger print seems like they were buying. And then I'll go to this one right here. I click on it, I look at it, and then looks like they were buying these originally, right? Right. So like they're buying these. They're buying the Julys. So I don't know why they're buying the Julys, but they're buying them and selling May. So maybe there's something going on in this stock. I know they have earnings on May 1st afterwards, but they're shorting the May and buying the Julys. And if you get, I never traded this before, so it's something, it looks like it's on an uptrend. Maybe it's something that there's some news out or something, but essentially it's something worth investigating if you wanted to trade it, right? Some of the other one is I saw ABX on the ticker quite a bit, and it looks like, and these are randomly picked, right? The reason I picked these is because either like they're interesting to me, but there are literally 100 of these that you guys can choose. I picked ABX because it's a gold mining stock, and I saw these calls go, and so you can see that they're buying a lot of calls in ABX, right? So you know, if you look at this chart, it looks like it had this like bounce. You know, it might be something worth like piggybacking. Not sure. You might have to like check. You know, sometimes when I might check GLD. Maybe had a little bounce here. GDX, which is gold mining index, right? So you check these and you're like, okay, this had a bounce. Let me actually see if there's the same order flow here. And yeah, this order flow is pretty bullish, kind of like ABX. So whatever, so not only is ABX, maybe you check Newmont Mining. Yeah, Newmont Mining is basically bullish as well. So what you do is you kind of go around and check other gold mining stocks just to see if it's verified or if it's unique to ABX. If you agree that maybe the downside is done for the mining stocks, then you would actually piggyback that and do a trade that actually mimics it, right? So you're just copying what the other guys are doing and then seeing how that goes. Okay, so this morning, usually I get this report for earnings, but this morning I didn't get it. So, you know, I think for the earnings, we'll probably, Apollo had earnings, basically 9.5% move was what they predicted, and if you look at Apollo this morning, it moved 9.5%. So basically it was right on. So there was nothing really to, you see how it's like 9.5% move? That's what the option market was saying. It actually is down 9.5%. So, you know, basically the one that's left is Micron and KMX. Let's actually check Micron to see what that's saying. Say, yeah, the order flow is pretty much neutral, like it's not pointing anywhere. The vol's up slightly. CarMax is going to report 4.4 before. Same thing. There isn't even that much volume going on. So you can see it right here, except it's kind of moving up a little, right? So, so these are ways you guys can actually use to trade and generate ideas, which I don't think you can get really anywhere else in this detail and research it this quickly, right? So I just clicked this up. Nokia, May 17.6 put, 17,000 traded on the offer, right? May 6 puts in Nokia. So I type in Nokia, I go to options, I go to May, right? So somebody bought basically all these puts right here. Maybe I should do bigger than 500. Bigger than 100. Right, so May 7 puts, looks like they're buying. Oh, actually, this is the one, right? May 6 puts, sorry. So I click on the volume, I click on this. I click on any of these trades, and then it should tell me what's going on, right? So I look at it, and there's 17, right? So basically 17,000 trade for 17 cents. So it's and this is the earnings month, right? So this is the earnings month option, and they're buying the 7 puts. If I look at the chart, you know, they're buying these puts right here. So who knows why? Maybe they feel like if it breaks this, it's going to go down quite a bit. Or maybe they feel like, you know, they're long stock and they want to protect themselves below 7, right? But whatever reason, you can see that trade go up. And I got it because I was looking at this, right? So I see this thing trade. You see 3,500 of the Micron spread right here. So they're buying the 22.5 20 put spread for 12 cents in Amex. So all this stuff, oh, actually, 23.5 put. So this could be like one of those Christmas trees or something. The Christmas tree is like where you do 3 strikes in a row, you buy 1 and sell 2. I would have to investigate more to find out. You know, but KSU, if you were trading that 1200, you see SLV continuing to basically buy some calls here. So if you're trading ZNGA, you see the 5 calls trading all this time. So like for me, you know, if you're following this, you're like, oh, okay, so you know they're buying some calls, or at least like it's worth investigating. So you can actually scroll down and you see all these trades that are happening, and you can go back and see if it pertains to you, right? So as you trade, you're gonna actually know stocks that you trade. When it comes up, you're gonna do this. So Charter is a perfect example. This thing just popped up, right? 2 minutes ago, this trade happened. 1,400 contract, September 145 calls. Right, I go to the stats tab. Right, 1,400 of these. Right. So the question is why, you know, why is this trading? Maybe this person is thinking, you know, they will make another bid, and if they do, maybe I'll get another uptick. But whatever it is, for Time Warner, because everyone thought they were out. I was actually bullish. I had a position right here, selling the put spread. So I was able to make money on that, but then basically then it went down. So I was actually thinking if they make a bid, it'll go back up to the 140 range. But I think we'll see what happens there, right? So if they do make a bid, I think it's actually bullish for the stock, not bearish, even though they might be you know, overpaying. But anyway, that's about it. I'll talk to you guys tomorrow. Hope everything is going well in your trading, and see you guys tomorrow at 10. Take care.